So for those of you who don't know me, my name is Professor Mark Reed. I am director of the Thriving Natural Capital Challenge Centre, which I jointly lead with Dr. Hannah Rodman, who is here as well. I am chairing today's Strategic Advisory Group, which has been funded by SEFARI. SEFARI, in turn, is indirectly funded by the Scottish Government. Andrew Kello is here and can correct me if I'm making any mistakes here. Stick it into the chat if you want, please, Andrew. But this is a UK national event, so we have policy teams from all 4 UK countries alongside members of the investment, the landowning and advising community, the NGO and third sector community, and rural communities themselves. As we're all aware, there are huge challenges that we have to meet as a society when it comes to reaching our net zero targets, at the same time as tackling the biodiversity crisis. And so all of this needs to be done with limited public funding. A Green Finance Initiative, I think, is it, GFI report, maybe someone can put a link to this in the chat if you're familiar with it, put a price on the gap between the amount of funding available and the amount that we need to meet our climate and biodiversity targets at 20 billion alone for Scotland, much more for the rest of the UK. How do we reach that? Well, one way is through ecosystem markets, natural capital, and the like. Huge opportunities in this space if done well, and yet concerns that if not done well, that this could lead to lights going out in rural communities that have now been afforested, perhaps against their will. Issues with food sovereignty, the concentration of land ownership, and land prices, which I guess are good for some if you're a landowner and maybe not so good for others if you are a tenant, for example. So huge opportunities to reach the scale, the ambition, the speed of change that we need across the land use sector. And yet, huge potential for this to go wrong. And as a result, a lot of people asking the questions, what should we do to ensure that we avoid as many of these risks as possible and actually can genuinely and responsibly exploit these opportunities? And that is the purpose of today's session. We want to understand better than ever before what those risks are, how real, how big actually are they, or not, as the case may be, and the same with the benefits. How might we mitigate some of those risks, and what are the practical ideas that we all have for policy and practice that could help address some of the challenges that we discuss. We will be following this up and supporting you if you want to put this into policy and practice and seeing where this goes. But my hope is that this will lead to real change in policy and practice in this really live, fast-moving policy and practice area. I'm going to hand over at this point to Dr. Rob McMorran, one of my colleagues at SRUC, who has led with many of the rest of our team on the development of an evidence review. As he will point out, this is very much a draft evidence review. The whole point is that we want to co-produce this with you. So today's workshop is about getting your thoughts, your perspectives into this and integrating that. And what we eventually publish will integrate your knowledge and perspectives as well. And you will have opportunities to really very strongly shape both the report and the briefing that come out of this. So Rob, over to you.
Great. Okay, thanks Mark, and thanks everyone else. Yeah, as Mark said, this is very much a group effort, and obviously you've seen the draft summary and the draft report, so I've put a fair bit of detail in here, but hopefully most of you have had a chance to at least look at the summary, so it won't all be a surprise to you. It is very much an overview of the key risks and trade-offs, but also the opportunities, significant opportunities associated with large-scale land acquisition, but also just carbon investment more generally as well, I think it's fair to say. So just in terms of the context and the background, which I think Mark really sort of set out, there's obviously increased interest in this area in relation to carbon markets and investment in natural capital generally, including following this sort of land sparing model, which is really where you sort of set aside land for carbon sequestration specifically, as opposed to the sort of land sharing model where you try to do carbon sequestration and other activities at the same time. And that sort of approach, as we've just said, poses a number of risks, but also a number of
Oh,
clear investment
sorry.
opportunities. Yeah, okay. Yeah, perfect. All right.
It's getting there, yeah.
That was the cover slide. I think you might have already seen that anyway. So back to the context and the background, which, as I said, Mark's already sort of set out to a certain extent. There are risks and investment opportunities here. And also the important point is there is a potential funding gap, which has been recognized by the Green Finance Institute as equating to somewhere in the region of 40 to 100 billion over the next 10 years across the UK. And quite a lot of uncertainty around how land acquisitions may or may not align with policy, whether that's post-Brexit agricultural policy, land reform policy in Scotland, and so on. So I want to give you a little bit of a snapshot of the land markets at the moment and the role of natural capital within them. In terms of the farmland markets, they can be characterized in terms of a long-term decline in overall supply, as evident in the chart on the right here, and also very high levels of current demand. And that's partly being driven by non-agricultural buyers. So whether that's lifestyle amenity buyers or forestry investment buyers, they're accounting for over 40% of the purchases of farmland over the last sort of 5 years across the UK. We're also seeing quite a bit more off-market activity, maybe about a third, but estimates vary on that. So that's where it's not being publicly marketed. And overall, considerable growth in land values in the last couple of years in particular, around about 6% in 2021 across the UK, but a bigger jump in Scotland, around about 30%. And plantable land in particular has seen a really big jump in values. That's, marginal agricultural land that is plantable in Scotland in 2021, so going up by over 60%. So overall, the point there is that there's really a reducing influence of agricultural land quality and profitability on a year-by-year basis, which is being replaced as a driver by investment potential in particular, and some of that relates to natural capital. That's the farmland market. In terms of the estates market, which is it's a niche market in terms of the number of marketed units. Around about 30 estates are marketed annually in Scotland, and less, about 10 or so in England, averaging about 3,000 to 4,000 acres in size. So maybe a bit smaller than you might expect, but there's also quite a lot of larger ones, or a smaller number of large ones, I should say, within that sample. And the investment in 2020 was over 100 million, which is 55% up on the 10-year average. And it's fair to say that in 2021, we saw further rapid, substantial growth in the overall amount invested. And also an increase in off-market sales, off-market activity, again, increasing, and also corporate buyers. So I'm sure you'll have heard about a number of the high-profile ones like Aviva, Brewdog, Standard Life, these sorts of corporate buyers moving in more to the estate market, particularly driven by green investment drivers, whether that's net zero, organizational net zero targets, or net zero policy targets, potential for offsetting afforestation and peatlands. And for some of the smaller residential estates, the sort of pandemic factors, the work at home aspects are also driving increased interest in estates, as they are across rural properties more generally. Forestry, and along the bottom there, you can see the average per hectare price of forested land, and also the timber price is the red line from 2000 to 2021. So very substantial growth. And the market really is characterized again by high demand and low supply, and particularly driven by the role of institutional investors, or what we tend to call investment forestry, driven by increasingly ESG, environmental, social and governance commitments, afforestation policy and the available grants, but also timber markets and also carbon markets, particularly in relation to native woodland creation on poorer quality ground. And also the overall investment performance of forestry, which has outstripped most other commodities in recent years, in particular as an investment. So we've seen around about 200 million invested in 2020, and again in 2021, a similar level of investment. And reflecting the demand, the average price, the average sale price has been usually on average over 50% over valuation. And also, as I just mentioned in relation to the farmland prices, plantable land values have experienced pretty substantial increases in recent years, particularly in Scotland. And I think it's fair to say the driver there tends to be more the productive forestry and the investment potential of productive forestry, as opposed to woodland carbon, although that is important as well in some of these cases. So that's just a snapshot of the markets for now, which you can find more detail on in the reports. To have a look at some of the risks in a little bit more detail, and the first one is around design and integrity of natural capital markets. Use of offsetting in particular is a concern in relation to using offsetting as an alternative to emissions reductions where this may be occurring. Also concerns around insufficient projects to meet demand. We have two established codes in the UK which are functioning well, the Woodland Carbon Code and the Peatland Code, but there's insufficient projects overall. And actually most of the offsets being bought in the UK are coming from overseas. And at current carbon prices, most of the projects wouldn't actually be viable without public funding. So there's still an important aspect here is blending public and private finance. And in relation to that, looking forward, there's a risk there in relation to poor alignment of public support and natural capital markets, which could result in either inefficient public spending on the one hand, where you're using public spending to do something that the natural capital markets could achieve on their own, or alternatively, markets crowding out incentives for whatever it is, land use incentives, and reducing the uptake of those incentives and the influence of those incentives on the ground. And as well as that, and you'll see this sort of theme return to, markets may favor certain services or sectors or locations, and also there's barriers in relation to agricultural tenants as well getting involved in these sorts of schemes. So there's potential there to create winners and losers. And the second area of risk in the report, market transparency around land availability, particularly in relation to this point that I mentioned about off-market sales. Increased off-market activity, potentially reducing transparency, harder to get a handle on what's happening in the market, and potentially influencing people's ability to access the market as well if there's a smaller pool of investors or buyers. Limited market regulation. Generally, there's no real formal government involvement in land sales or restrictions on foreign ownership, for example, like there is in some other countries around the world. And also a contextual point here, and the context is important in relation to all of these issues, really. There's an increasing disparity between land values on the one hand and farm incomes on the other, which again potentially could exclude new entrants or reduce the potential for farm expansion just because of the cost of the land. And that's sitting against really a long-term constrained supply of land, and an overall decline in the number of agricultural tenancies across the UK over the last sort of 20 years or so. And another important part of the context here relates to land ownership concentration, which potentially can impact on economic development opportunities or community opportunities to influence land use. And again, there's lots more detail on this in the review. And linked with that, the increasing interest that I've just referred to when speaking about the land markets in land from corporate investors, which internationally has been shown as the outcompeting of farmers has been shown to have potentially negative effects on community outcomes, community cohesion in agricultural communities, and so on. So there's sort of longer term implications there of some of these land use transitions. And also related to the land ownership concentration issue is the fact that natural capital itself, or the underlying natural capital assets, are unevenly distributed, partly because of geography, where the peatlands are or the plantable land is, but also because of the concentrated ownership of the assets themselves. And so there's policy design implications there in relation to payments for ecosystem services, which could potentially reinforce existing wealth disparities because of these underlying contextual issues. And the last area of risk really relates to large-scale transitions. The UK Committee on Climate Change envisions something in the region of 20% of the UK's agricultural land being converted to some other form of land use. But there are a variety of constraints in relation to this, whether it's designations or game management objectives. Food security, particularly in relation to better quality land, and also concerns around planting on deep peat, for example. And for example, there greater than 40% of grouse moors have been recognised as unsuitable for productive forestry. So there's
Rob, can I interrupt again? I do apologise. I'm struggling to read some of the smaller text.
Okay.
We're seeing like a kind of a next animation view. It's quite small. Is there a way of just changing the display settings, or try that one?
You can see this black screen, can you?
Yeah.
I didn't realise that.
Try
okay.
that. No,
I
that's
did.
black. No, that wasn't the right one. You need to press that one again because that blacked it.
Right.
So
I didn't know that you were seeing this. Sorry, I don't know how to. Because that's because there's two screens.
how about
Rob,
just
it's at the top. If you can see display settings as a middle option, and then you switch from display settings to the whatever the alternative is. At the top of the screen,
Yeah.
it says display settings with a down arrow. Yeah, you're getting close.
left a bit, up a bit?
To the right.
No, I'm not seeing display settings. Well, I'm not there.
Oh, that is strange. Oh.
Okay, weird.
So
Let's just go with it then.
We've managed so far.
Okay, I am sorry about that. I'm not sure what I've done then. And I'm not seeing display settings any. I don't know why that's not there. Sorry about that.
That's okay.
I think it's because of the.
I'm getting close to the screen. I can still.
Okay.
And if you can share the slides afterwards, then.
Yes, absolutely. Yeah.
Doug is saying, click on the 3 dots and then exit presentation. Apparently, is how you do this. Thanks, Doug. Do you see the 3 dots underneath the?
I see the 3 dots. Leave. Yeah.
No. Exit presenter preview. I think it's called. I can't remember the exact terminology.
Yeah, not there. Only leave.
Let's
Only
just
leave.
go with it.
I am sorry about that. Yeah. Limited understanding as well of interactions around soil carbon, woodland type and sequestration. And while there is considerable potential for forestry and rewilding as viable, economically speaking, alternatives, and there's also potential in there for community impact. So if you're going to change a land use at scale, of course, that's going to have some implications for the existing habitats, the existing land uses. And the other issue there as well relates to small farms potentially lacking resources to engage with ecosystem markets. Okay, so you've got your opportunities in the summary report and also the main evidence review as well. I've just touched on a few of them here. I haven't put them all in, but that's not my interpretation of which ones are more important. It's just to pull a few of them out. The first broad category relates to land market transparency, particularly in relation to building on the evidence base on land market activity and independent assessments, in addition to guidance or creating guidance on rights and responsibilities for investors entering the market, and also greater consideration of formal approval processes for sales, such as a public interest test for large-scale acquisitions, which has been considered previously. As well as that, participatory and collaborative approaches, so considering, for example, just one of the options there, assessing the potential for community natural capital funds, similar to, for example, community wind farm benefit funds. And in relation to the access to land constraints and issues, facilitating joint venture mechanisms, including partnerships and share farming, but also addressing some of the barriers to tenants engaging in natural capital markets. And the other two broad areas of options here relate to developing high integrity ecosystem markets, expanding the existing market opportunities, but also developing buyer checks to ensure land is only used for offsetting unavoidable emissions, developing a policy framework in each of the UK countries on design, governance and operation of ecosystem markets and aligning those with public support, and also potentially development of a UK coordinating body for ecosystem markets to provide oversight and compliance. And the last area there relates to the development of place-based collaborative approaches to ecosystem markets, such as in Scotland, the regional land use partnerships and taking those forward, a data-driven approach to sort of collaborative ecosystem market development at regional levels. And finally, an important one, I think, in relation to knowledge exchange and training for land managers and guidance on engaging with ecosystem markets and getting past some of these complexity challenges. Just a few overarching conclusions off of that. Obviously, there has been rapid market growth, and that does have implications in relation to longer-term access to land for a variety of investors, and also in relation to transparency around the off-market sales issue. And profitability and land quality have been replaced, as I said, by investment potential as a driver, and there's an increased role in the market now for non-farming investors. And natural capital, and particularly carbon, is clearly influencing the land market, but particularly in relation to estate acquisitions by corporates in recent years, whereas some of the sales of plantable farmland have been driven more by investment forestry in particular. And there are some long-term implications, I think, which need further consideration for communities and policy conflicts. And the last point there, relates to this recognition that the income potential related to natural capital markets is unevenly distributed, and that really suggests there's a need for a greater alignment in the future of natural capital markets, but also public support to counteract barriers and conflicts and create options across all of the holding types. So I'll stop there and apologize as well.
Thank you, Rob. That was brilliant. And if the crowdsourcing of PowerPoint tips is anything to go by,
I'm really sorry about that. I think it's a two-screen issue. I should have just gone out with the one screen. I think it doesn't seem to like the second screen. Yeah. Anyway.
Yeah. You live and learn. So we are going to have a plenary Q&A session towards the end of today. But at this point, we're going to dive into our small groups to start digesting, throwing these ideas around, discussing them in the first of 3 discussion sessions. So Samson, if I can hand back to you to explain how that's going to work.
Yes, absolutely. Thank you all very much, and thank you for all your help with Rob's PowerPoint. I kept well out of that one. I was busy putting the breakout rooms together, and unfortunately we have a Q216. Q216, please identify yourself so I know who you are, so I can put you in your relevant breakout room. Thank you very much. If you could rename yourself, and if not, just tell me in the chat who you are so I can put you in the relevant breakout room.
Okay.
Thank you. What I'm going to do now is very quickly share my screen and cross my fingers and hope for the best on that one, because I'd like to show you the sticky note capture app that we use for this. And so here I go, sharing screen and crossing my fingers. What you're looking at is basically the landscape in which you're going to be immersed for this particular conversation today. It will look as if it's a little bit confusing, but don't worry, your facilitators will take you through it. All I'm going to do right now is basically tell you that your mouse wheel is your best friend and going in and out of what you can see there. And if you want, you will be invited to type out your thoughts and your ideas and your input and your feedback into these sticky notes that have been pre-prepared for you. Discussion 1 is yellow, discussion 2 is green, discussion 3 is the prettier colors at the bottom. You don't have to worry about remembering that. Your facilitators will guide you through it. All I'd like to tell you is that all you have to do to type anything into any of these notes is click on one of those notes. You'll see this bar coming up. You click on the magnifying glass, that takes you right in, and then you can start typing. It really is that simple. So let's do this again. Pretend you're still there. You want to type into this sticky note. You select the sticky note 1, 2, and 3. That's all you have to do. It's very, very simple. 1, 2, 3, ABC is what I like to call it. So you click on the sticky note, click on the magnifying glass, and you start typing whatever you want to type, and we will capture it. It doesn't matter how much you want to say it all. If what you're trying to say can fit on 2 different sticky notes, put them on 2 different sticky notes. If you can fit it into one, fit it onto one. Ideally, it's one idea per sticky note, so that when we download everything, it's easier for us to know what was said when. So again, it's very, very simple. Select, zoom in, and begin typing. It's all you have to do. So hopefully, in the past, we have not had these things get in the way, and hopefully we'll be able to get them all done. So I'm going to stop recording now because we've captured the first bit, and then we'll record again the plenary at the end, as Mark said. So stop recording, cloud. There we are. And I shall spotlight Mark, or actually I'll pin Mark and Rob. If I can say something, Rob, so I can locate you quickly.
Yeah, I'm here.
There you go. Excellent. Thank you. And I'll pin you. There we go. Oops, no. Kieran, how did you get there? Sorry. Remove pin. There's Rob. There you go. I think somebody must have left or entered at that point, and you know how it all jiggles. So plenary, Q&A, please ask any questions, raise the reaction hand so I can locate you, or wave or say something. And any questions for Mark and Rob?
Put them in the chat as well if you prefer.
Yeah, absolutely.
And these can be questions or they can be comments reflecting on what you discussed. Not sure if we reached a conclusion. I'd like some other inputs on this, that kind of stuff as well.
Abby.
Hi, there was a question which I didn't know the answer to, but in our breakout session. But Rob, so the options that you put forward in the draft review, we're wondering if you mapped those against the Climate Assembly recommendations, or whether it's something that you'd be interested in doing at all.
No, they weren't mapped against the Climate Assembly recommendations, and I don't know if you know, I'm assuming there's some overlap in there, but I don't know to what extent they overlap. So I think the short answer is probably no, but it probably would be worth considering that, yeah, or at least having a look at to see what the level of overlap is, and seeing what we could then make of that. At least raise it as a point in the conclusions or a discussion point. Yeah.
Yeah, actually, related to this, Mansi made a nice suggestion that for the final report, we might want to have some kind of table that has some basic comparison between the options, some criteria that we might want to kind of grade each option against, so that we can kind of at a glance see, these seem to be the favoured options for these reasons, before then going into all of the text. I don't know how viable that actually is, but it sounds like a nice idea at least.
Annie. Oh, no, okay. I thought I saw you wave. Questions, comments, how did you interact with? There was a lot of notes on your murals, and I'm very grateful and I'm very happy. Maybe would the facilitators like to just say a couple of words of how you know, maybe the one thing that came out of your breakout session? If there's no questions, we might as well treat this as a bit of a summary. Would the facilitators like to? Yes, Andrew?
Yeah, we had a really good discussion. I think a very strong sense came through about the people feeling very strongly about the ethics of all of this. You know, that fundamentally this was a question of equity, and you know, we mustn't lose sight of the human dimension. We were, I suppose, challenged by people in the group to think big in any future work, and actually were we talking here about a consequence of patterns of land ownership and land use and land regulation, rather than, you know, effectively were we dealing with the effects of that rather than the cause of something here. This is another manifestation of land use in Scotland and land ownership in Scotland. So some pretty big picture stuff, but also we got down into, you know, the nitty-gritty of the need for regulation and culture, and we were certainly, as a project group, challenged to produce something slightly more digestible than an 11-page summary, particularly for the practitioners, farmers and crofters who need this really boiled down and made much more accessible, because it's a live issue for them right now.
Yes, I will take responsibility for that. I was in charge of making the summary. It was just too much stuff, but yeah, I could do a better job, definitely. Yeah, really good points.
Thank you. It's Hannah. Are you around, Hannah?
Yeah, very, very similar reflections to Andrew's group, and also some thoughts around areas that weren't rich in natural capital. So how is the situation then equitable for them, perhaps thinking about urban areas as well. I guess we sort of discussed what happens in communities that have lots of volunteers dealing with all of this. How do we get to a situation where they don't kind of end up with burnout from having tried to get this going for so long, and then, you know, just sort of facing ongoing responsibility for it. And then finally, a comment that came up a lot in all of our different themes was about how to involve young people in all of the discussions and developments. Brilliant, thank you. Annie, could you give a very quick summary, please? Oh yeah, you've raised your hand. Oh, Mark, sorry. Did you want to?
Right. No, Annie, go first. Yeah, go for it.
No, I just wanted to summarise, because we had a really nice discussion. I think, though, that we haven't arranged it very well in terms of the way that I was writing notes. So I just want to flag that up. I just kind of stuck thoughts on any post-it note. So it might be that we have to regroup slightly. But in terms of what needs to be added to the report, one of the group members made a good point up front that we are looking primarily at new owners of land, and perhaps there's more to discuss about all other types of owners of land, because there's a lot of financial drivers and incentives that are leading to land use change at the moment that isn't perhaps the kind of sexy topic that's drawn everybody to come to this discussion, perhaps. And also that we need to think a bit more widely about what we mean by land sparing and land sharing, and it's not necessarily only about agricultural land. There are many other ways to share land, and also how we're looking at community wealth building, and to be quite innovative, I suppose, in the thinking about that. So we're tending to look at financial wealth, but there are perhaps other kinds of community benefit, but it should be something that is featured more highly, and not being, maybe the wind farm model is still too small and too variable for what we should be trying to translate in this context. And I also thought another member of the group made a really good point about not planning, not making recommendations with a kind of backward view, but actually trying to think about future-proofing these types of things, which is quite difficult to do, but making sure that we're not stifling innovation, and so that any options in the future are agile. And that, so we had quite a lot of discussion about the balance between regulation, responsibility, bringing people to the table. There was a good analogy of looking at Oscar as a kind of regulator for managing charities. Maybe if we're looking at how landowners are managing land in this context, we should be looking at how Oscar guide charities to deliver the outcomes that they said that they would do. So yeah, I think there's lots in that for us to consider more in the report.
Thank you, fabulous. We have a question in the chat. We still have some facilitators to go through, but let's bring this in. Who is the report going to, and what do you hope will come from it?
Yeah, if I can answer that, and then I'd like to bring a question back to the group, if I may. So this will go out to all of us. The idea is that this is a co-produced report. So as you've seen, there is some evidence out there that Rob and the rest of us have brought together. But this is a very fast-moving field, and a lot of the information we might want is not necessarily out there available. So it's about integrating your perspectives, your knowledge, your evidence from today. You'll get a revised report incorporating as much as possible from today, from the mural boards, and an opportunity to feed into that. That will then get published at the end of March. You will all get a copy of that. There'll also be a briefing note, which I will make brief, I promise. And the final audience for this is decision makers. And there are three groups of decision makers in particular that I think is relevant for. So we have interests from all of the 4 UK governments, their departments and their agencies, who are all grappling with the question, should we be trying to regulate? Should we be leaving this to the market? What needs to be done? So a bunch of policy people from across the UK asking these questions and looking for answers. And the idea is that we inform some of that thinking. Ultimately, it's up to you guys to make your own minds up about what you want to do. I think that the investment community are also looking to this. They want to design responsible investments. that are going to deliver win-wins on the ground. They don't want this stuff to go wrong, so they're looking at how they can use evidence from this to design better products. And then thirdly, it is the landowning community and what the landowning community might be able to do in practice based on this without having to be impelled by any particular regulation or legal instrument. Are there things that we can already start to do on a voluntary basis that will make this stuff better? So ultimately, it's going to be up to each of us and others who read the report as to what we do, and we will be following that up and doing an impact evaluation. You'll get a survey about a month after this. We'll follow up a few months after that, and that's not just to find out what happened, but also to offer help where you feel you need additional help to actually implement what you've learned from this process in policy or practice. Can I just check if there are questions about that before I move to the point that I wanted to raise and bring back for discussion? Okay, cool. So I'm just going to warn, can I just check, is Robert Hall here still? Robert, are you here? Can you hear me? I can't see, there's so many screens of people. That's the easy way to do it. I can see Bevis Watts is here. I'm thinking of other investors that people representing the investment community. We've got George Hepburn-Scott who works with investors. Great. So this is a question for those of you in the investment community in particular. So in our group, we had some discussion around the potential negative unintended consequences of bringing in regulatory mechanisms or other mechanisms that are designed to force some form of benefit sharing. And the concern that I've heard from many investors and people working with investors is that these investment opportunities already barely stack up. We're just at the beginning of this whole journey, and we could kill this whole thing off by making this far too complicated and far too expensive, and people then decide, you know what, I'm not up for this, I take my money out, I invest this somewhere else where it's cheaper and less complicated. And this kind of a sense that there's going to be a gold rush and that we need to do what we perhaps should have done with Scotland's oil and have this big wealth fund. But well, actually, is that money actually there yet? And is there a gold rush? And do we actually prevent the gold rush from ever happening, and therefore actually shoot ourselves in the feet? So this is one perspective, but in our group, we didn't have anyone from the investment community. We actually came to the opposite conclusion. And the conclusion that we reached in the group was that ultimately that we need to do what is going to be in the public interest, and the market is probably going to move in that direction. When you already look at the way in which investment funds are being designed, this is not just about carbon offsets. This is about carbon with biodiversity. In the vast majority of cases, it's not about conifer plantations wherever you can manage just to get enough carbon, because ultimately these are green investors in green products who want something which is going to deliver benefits for the environment. That's about their values. It's also about their reputation. And so as concerns are raised about the impact on local communities, and as publicity grows on that, then why wouldn't those same investors want to invest in products that are going to deliver those community benefits? And if you were up for just the cheapest possible, then you wouldn't be probably investing in UK markets anyway. Now, what we're looking for is those kind of co-benefits. And so that's probably where the market's going to go anyway. And even if it's not, that's where it should go. And if you introduce those regulations, then if it does have that negative unintended consequence, you can always revise them later. So I'm interested in some perspectives, in particular from those representing the investment community, but others as well, because for me, it feels like a really fundamental point. Bevis.
Hi, Mark. Hi, all. I don't know if Robert is on the call. We know each other, and he might comment if he is. But I mean, there's a lot in what you've just said, so I'll try and make 3 brief points. I mean, in terms of the tsunami of capital that will focus on this space, I mean, offsetting's a bit irrelevant in a science-based target net zero world, because financial institutions following that guidance have to inset the emissions. So we as an institution have set, I think, one of the most ambitious net zero targets, but notwithstanding the fact we've never financed fossil fuels, don't have any high emitting sectors on our books, we think 10% of our portfolio by 2035, when we want to be net zero, will have to be in nature-based solutions, regenerative agriculture, sustainable forestry, and so on. So there's going to be a tsunami of capital coming at this. The issue is most of that capital is not fit for purpose in terms of helping the market develop. So if Robert was here, he would tell you that Hermes and Aviva and the like, their minimum investment requirement is 100 million. So at this moment in time, what we're doing is looking at a very immature market with lots of small scale projects. And you could have a market driven by capital that wants simple, scalable projects to fit their criteria, versus what we need, which is to get lots of Pathfinder projects underway to prove a different model that isn't so simplistic all around carbon. So if you look at the Wyre catchment project in Lancashire, which we've been lead advisors on, there is a stack of ecosystem services revenues, with carbon only being a tiny layer, partly because of where pricing is, but it's primarily based around flood mitigation, clean water provisioning. There's some social ecosystem services all locked in through contracts and so on, and that money's been raised and is in legals, but that could then be scaled. It's like a project that's less than $1 million, there's a 3 and 10 million project down the line. And then once you prove that concept, then you could aggregate them, and then those could be aggregated for a larger investor with that scale of money. But my concern is that the financial sector, is part of the problem here. And ultimately, if we follow those requirements and those needs, you'll end up with that simplistic model with pure carbon considerations and the greater opportunity to deliver public good, including sort of, community ownership, distribution of wealth, broader ecosystem services benefits, is lost. So it's really important you understand where different investors and different investment communities come from and why that narrative plays out. So.
Fantastic. I think Mark wants to make a point.
Yeah, sorry.
Just a question for Bevis in the chat as well, if you can have a look at that. But Mark, over to you.
Yeah, I totally agree with what's just been said. The city is being pretty immature about this at the moment. And to some extent, we're playing into their hands. Because what we're developing here is actually a mouth-watering proposition. Aviva bought Glendy, as you probably know, for £38 million, which is an awful lot of money, bearing in mind that its pre-sale valuation was 14. And they did it basically on carbon. And I think there are two things about this. The first thing is that we've got to realize that all these projects are actually long-term. And in the early days of the project, when you plant trees, for example, first 17 years are actually carbon negative. After 17 years with a total conifer forest, you're getting carbon sequestration until it's cut down when it's 40 years. But if you cover Scotland or indeed the UK with purely conifers, as the last speaker rightly said, you have not got a balance. And in some way, the government has got 3 balls in the air here. The first one is carbon. The second one is natural capital, which I think was what was being referred to before, and the balance that required in a forest or indeed anywhere else, or with water, whatever you like to call it. And then the third one is food production. Because if we're going to plant lots of trees, by definition, we're going to be growing the same amount of food, unless we want to import it, on less land. So we have to face that problem as well. But what I think we've succeeded in doing is by, in a sense, bringing forward upfront carbon, so PCIUs, we're making this into a mouth-watering proposition for the city. That said, for a pension fund, of which I chair one of the largest, actually looking at a 40-year income stream is actually very attractive. And the NPV on it, the actual rate of return on it, is actually extremely attractive. And so we would be looking at doing it for 40 years. But if I can get PCIUs and get it up front, well, hell, why not? The fact that trees don't grow or they're blown down by Storm Andrew or whatever is neither here nor there. We just have to redesign this whole thing. And what I would love to see is the city, landowning community, and to some extent government, sitting down together and saying, how do we design this so that it makes those three balls stay in the air?
Yeah.
Mark, I'm going to have to ask you to please put that in your breakout in the notes if it's not already. That was so well articulated, and you've got your three.
I'll send you an email. I'm not sure. I really couldn't work that note thing.
Absolutely. If it's and it's recorded anyway, we'll probably capture it. But
yeah,
this
you'll capture it on the recording.
Very well articulated, David.
But if anything comes out of that,
yeah, yes,
that would be the greatest thing that could ever happen.
From your perspective, yes, absolutely.
Yeah. Well, not just from my perspective, from the perspective of the market, from the perspective.
Indeed. David and John, I'm just conscious of time. David.
Great, thank you. Yeah, I think what we have to do is get in context here the sort of land use change that we're talking about, and in Scottish terms, to achieve the targets that were set out in the Scottish Forestry Strategy in 2019, which was to increase the land use coverage in Scotland from 18% to 21% by 2032. What we're looking at is 5% of the available land, which sits between category 3.1 and 6.3 in the Hutton Institute category, land agricultural use categories. We're talking about 5% of that overall. Now, that's not blanket deforestation. That's not a huge land take in Scotland. So I think we should try and put that aside, because there's a lot of sensationalism about how rampant forestry development is in the UK and what's being achieved. That 5% would be if we achieved our targets. Now, we're nowhere near achieving our targets. The UK's target is 30,000 hectares per annum. And we're barely managing 15,000 hectares at the current time. So we're way below where we expect to be. So I think we should just bear that in mind. Also, the type of planting that's happening at the moment, 10,666 hectares were planted in Scotland last year. 35% of that was in a broadleaf model. The remainder in a conifer model. Now, when you take into account that a conifer model will include up to 10% broadleaf and open ground as well into that, you're probably looking at a 60-40 mix of conifer plantation versus broadleaf. So we're not in the 1980s here. We're not blanket conifer foresting areas. So I think it's just very important to make that statement. As far as investors are concerned, we're dealing with a lot of significant investors in this space. They're early adopters in this space. This is a really juvenile market at the current time. We're at early stages of the voluntary carbon market. There's a lot of risk involved for these investors, and I think putting significant barriers, which Mark was your original question here. Will significant barriers alter the way that these investors look at the UK for investing in carbon? Absolutely, I think it will, because there is significant risk. We don't know, given the very immature status of the voluntary carbon market, where carbon prices are going to be. Now, there is an expectation that these are going to increase, but we don't know. We don't know that. We have to assume that government policy will lead organisations into a measure, reduce, offset.
I'm very sorry, David. We're on time.
Okay, thanks. That's enough.
Just to hear. Thank you, though. That's very yes. And just to hear John's question quickly, and then you can see the chat. John.
Yeah, just I was really interested to hear what Mark said about the investors suggesting that regulation kill the market, and in the immortal words of Mandy Rice Davis, they would say that, wouldn't they? I was really pleased to hear what Bevis said, and I think regulation is absolutely essential, because investment is not free money, it's predicated on a return, and the key issue for communities, and most of us who live in Scotland, is how extractive and exploitative that return is and how the benefits are distributed. And unless it's properly regulated and fairly regulated, then the chances are that bad money will outcompete good money from our perspective. So I think it is essential that there is proportionate regulation of investment, and not getting scared off that it will drive investors away, because as the other Mark said, I think there is a very good and very profitable opportunity there for investors.
Yes, absolutely, undoubtedly. The chat has just come alive. Mark, do you want to pick a question? I like there's some dialogue about ESG, and I think that's quite interesting there. And Tom from the community land saying, are there any barriers to those institutional investors to consider partnering with community landowners? Does Aviva need to own the freehold, or can it go into partnerships? Is that something else that could be a model that could be talked about? Mark,
I was particularly fascinated by Tom's suggestion there. I would love to hear some feedback. I think this is not about questions for me or Rob. These are questions for others here who have been chosen to come to this for your own expertise. So thanks, those of you who have answered questions on the basis of your expertise. I'd be interested in an answer to Tom's question. So I'm not going to add anything more.
We are running into time, unfortunately. We're supposed to hear from Rob next about next steps to help shape the final report and the briefing. Would you like to take another question, Rob and Mark, or do you want to say any more about the report?
Let's make sure we finish on time, if that's okay, and let's just move to that as planned. I'm happy. I'm meant to be in a meeting at 4 o'clock, but I'm sure my colleagues won't mind if I'm a bit late. I'm happy to stay around and have some informal chat with those who want afterwards, and others who wish to do that, please do feel free to hang around. But let's move to Rob to make sure we don't.
Rob, you've got 3 minutes.
Sure. Just to say thanks, I guess, and in terms of feedback, I think essentially, as Susan's mentioned, you can continue to put comments in those boards for some time to come, but please do that within the next week or so, I guess, because it will close and you'll forget about it.
Thursday, I'm going to close it on Thursday.
On Thursday, yeah. So you've got a few days, but also you can email me or Mark directly with specific comments on the summary or the report. We're more than happy to take those comments and to feed them in. There was one thing I just wanted to kind of respond to, I suppose, which was the comments about carbon and investing in carbon, and the point about, estates going for very high values at the moment. And just to remember, I suppose, that we're not just investing in carbon. We're also investing in the underlying land and speculatively considering what that's going to be worth longer term. And obviously the corporate perspective on that is different to the individual perspective. And I think to some extent that's driving the value as well. And land at the moment is a good investment, carbon or not. Carbon's added to that without a doubt. So it's just to remember that, and land is a finite resource, it means different things to different people. So I just wanted to kind of respond on that point. But yeah, please do feedback to us. We'll do our best to feed that into the report, and we will circulate, I guess, a timeline in terms of final outputs on this as well. Mark, back over to you.
Fantastic. So as is often the case, our discussion has just gotten going as the time runs out, which is always frustrating. And the key thing is that we capture that and continue that discussion. So there are going to be a couple of mechanisms for doing this. So there is a survey that is about to come up just now that Southsan is going to run. And there is the opportunity to feed into the report. So you'll see what we've done with all of your suggestions, but really keen to get your written inputs into this, co-authoring this, adding in this content, these ideas into our report. And as a project team, I speak for myself, perhaps not for everyone, very happy to meet up with people and to have conversations with people where there are things that you want to go into more depth with.
Yes, absolutely. There's been questions in the chat about leaving it open beyond Thursday. I'm actually quite happy to do that. It was just because we had agreed a day, but a day or two or a week isn't really a great.
Friday.
It's not. So I'll leave it open till Friday. only because then we need to collate and analyze the results for the report. So if the longer we leave it, the longer the report will take to get through. So Friday, I'll close it sometime in the middle of the day on Friday, let's put it that way. So that should be okay. The new Mentimeter is there now. The old one is still, or the first set of questions obviously are there. And the second Mentimeter is there, and you should be able to do it at your own pace. So hopefully it would be great to see your inputs on that one. We're very much on time. We're going to leave it 5 minutes. So we can multitask. Some people can be doing the Mentimeter while you can answer some more of the questions on the chat, Mark, or do we just want to take the chat and put it into the report with the questions as further explorations?
Yeah, well, how about if you want to launch, you've launched the Mentimeter, so let's answer these questions. I'll say some closing words. I'm sure you can multitask while I'm saying some closing words, and then we can either leave early or just stay for some additional discussion, keep that going. As you'll see in the Mentimeter, I've just put this up on the screen. We want to understand what you have learned from today, but we also want to understand your intentions. What do you want to do with what you have learned today? And we will be following up on that and want to help you if there are things you want to do to follow this up and put this into policy, into practice, or use it in some other way. The key thing is that this makes a difference. It's not just a talking shop. So as you're answering those questions, I'd like to conclude by thanking in particular our facilitators, a couple of whom stepped in somewhat at the last minute to help with this. We had so much more demand. It was a struggle to make sure we had the facilitators. So thank you for that. Thank you to the rest of our team who haven't been given credit fully for this. So Abby, for all of your project management expertise, Jane Glass from SRUC, who isn't able to be here with us today, Robert Moran, Hannah Rodman, Andrew Bauer, also from SRUC. Thanks Bobby Macaulay from University of the Highlands and Islands at Perth, Annie McKee from James Hutton Institute, Leo Pescott from University of Edinburgh, Rachel Halliwell from the Water Centre for Expertise, funded by Scottish Government, Sarah Governman by the Climate Change Centre of Expertise, and of course, Sausan for your skilled facilitation today. It has been a real pleasure. Also, thanks to everyone who came to the Scottish Land Commission roundtable that preceded this. So Hamish Trench facilitated that, and that was a fantastic introduction to this for me. And we try to invite as many of you as possible to continue this. My hope is that this has felt like a continuation, that we've been able to go deeper and further, not just in Scotland, but elsewhere in the UK. At this point, I'm going to suggest that we formally close the meeting. Please do take the time to just finish off those questions on the Menti link, and that then gives us 5 minutes to go and get a cup of tea before our next meeting, if that's what we want to do, or 5 minutes or longer if you wish for a bit more extended discussion. So we'll keep the recording going to capture that discussion if people do want, but it just remains for me to say thank you. Look out for an email from me with all of the next steps and how you can feed into the report and briefing. Thank you for your time. Thank you for your generosity of sharing your brains with us today. It has been a pleasure.